Hello and welcome to another closing bell out of the studio with me, Charlie Ormond, and I'm here joined in Brisbane from the chief trader here at Fat Tail Investment Research, Murray Dawes. G'day, Murray.
G'day, Charlie. How you doing?
Very well. It's a cold day in here in Melbourne. How are you going in Brizzy?
Oh, about 30 again. Bloody beautiful up here.
Living the dream. Living the dream.
That's it.
Very jealous. All right, so this will probably be our last session out of the studio. You're back next week, but we've
Yep.
got some interesting stuff to talk about this week. There's been a lot of movements. I think the big themes we'll talk about this week, we've got the US dollar, which is looking stable and set up maybe for a move. Oil, which has obviously seen a huge rally on geopolitical news. The big plunges in gold and silver, and whether or not that kind of long-term bull trend is still there. And then we'll finish off with the big rare earth steel that we've been talking so much about. But I think
Yes.
to set the scene, I think the US dollar is the big thing that we've been setting up for a longer move. So what are you seeing in the US dollar?
Yeah, well, it's been trying to rally. It's had a terrible year. It got absolutely hammered at the start of the year, the worst start to a year in decades. But it's held in there the last, what is it, about 4 months. It's really been just stuck in a range, that US dollar index, between sort of 96 to 100. And just in the last few months, we've started to see it rallying from those lows. So it's sort of setting itself up, I think, for a short squeeze, which could see the US dollar rising quite rapidly. But that still very big picture is not long-term bullish for the US dollar. That will probably be a good selling opportunity, if anything. But it'll just affect markets over the next sort of few months if we do see it break out. So I just want to point out quickly what I'm seeing there. So we've got the long-term chart of the US dollar index here. You can see, was stuck in a range there for many years. Back in the day, that's 2015 to 2020, this range. Now I'm looking at this big rally that we had from 2021 to 2023, looking at the midpoint there around 102, that point of control, the midpoint of the range, very important. And you can see for a few years there, it was sort of holding or attempting to hold above that range. But this year, this is where we saw that big sell-off from the sell zone of that range, the complete failure. And I actually did point this out at the time. And so you can see where it did collapse. I did actually call this out at the time. Watch out here, because from that sell zone, we've got the monthly sell pivot, massive smashing. And you can see getting all the way down there. I've been sort of wondering, is it going to have a complete fall right down into that buy zone area? But you can see it got pretty damn close just last month. And since then, that's where we're seeing that buying pressure starting to come in. And at the end of this month, so what's that, next week? If it does actually close where it is right now, that will actually confirm the first monthly buy pivot since we saw that sell pivot come in at the start of the year. So that'll be interesting to say, right, we are actually seeing enough buying pressure to create that reversal indicator on a monthly. And also, really the key thing I'd be watching is around this 100 area. I'd really need to see it above there to, I guess, say that it could be on, because that was the high of the range that we've been in the last sort of 4 or 5 months, and also the bottom of the range over the last few years, you can see here. So it can actually head above there. That will be above the 10-month exponential as well. I think above 100, 101, you will see it kick. It will actually kick as a mean reversion, not only of the last few years trading. So you can imagine the midpoint of all the trading over the last few years would be around here, around that 104 area. And also the long-term moving averages, the 20-month. But what I'm saying there is you could see that big kick higher, but there still could be a wall of selling up there. And if we did see that and then the selling resumed, that's when you're talking about really big picture changes that could see, massive falling away of the US dollar. So I'm just saying that we can see a multi-month rally, but I'm not turning, bullish the US dollar in a big picture.
Right. Yeah, of course. I mean, we've got the big CPI report due overnight, right? We've been starved of data from the US since the BLS changes, right? When the Bureau of Labour Statistics head was axed, and there's obviously a big
Yeah.
pullback in the data they've been releasing. So there's been a lot of people clinging to what this new inflation report is going to be giving. If it's hotter than expected, we could see that dollar to continue to strengthen, maybe break over that 100. But if it's steady as she goes, then maybe it is just a short-term blip and some otherwise longer-term weakness. So it'll be an interesting one to watch, really.
Yeah, because it'll also affect things like gold, which is looking, a little bit on edge at the moment, that it could sell off. So if we do see a spike in the US dollar, that could just kick the next leg down in the gold as well, I guess.
Yeah, yeah. And another big performer this week, I mean, oil we have to talk about, right? It's been absolutely surging. And we've been mentioning this many times in the past few weeks with different ideas. But obviously this week, the recent surge, we saw roughly, 8% this week, with massive surges on Wednesday and Thursday after fresh new sanctions from the US on the Russian oil majors, Rosneft and Lukoil. So all aimed at tightening Moscow's exports to try and starve them of that revenues and try and bring an early end to that Ukraine war. So that obviously that kind of geopolitical shock has sent traders scrambling and repricing those new supply risks. So big movements there.
That's it. And look, I was saying, the $59, and it still remains the case that if like that UK Brent crude oil heads under $59, it really can collapse. But as I said last week, it needs to get below that level to kick it off. Because as I'll show you in a second, this is where this sort of buy and sell zones of ranges comes in, and so often happens, where if we've just got, I'll just get you a nice up and close of what's been going on here in that oil price. And I was saying, if it does actually collapse, sorry, just getting organised here. So here's the sell-off over the last few years, and I was saying, look, if it does actually head below that $59, which is the bottom of the whole move in the collapse in the oil price in the last few years, watch out. And that's still the case right now. But it does actually have to break the level, because the reason is, if I look at that range, that was the last major wave down in the selling. I trace out the buy and sell zones, as you know. So we've got the sell zone there, and down here we've got the buy zone of that range. So you can see on the spike, prices went right up into that sell zone, and within the long-term downtrend, that was a pretty good spot to be saying watch out. I was saying watch out up there. This is where the selling could come in. But then down the bottom, it can be that it sells off to look like it's going to break, and I really thought it only would have taken a day or two for it to actually get hammered through there. But then we've had a change of the rules, and we've got the new sanctions come in, and all of a sudden the people who are short, getting ready for that break, are having to cover their position. So you've got from the buy zone, it's spiked. So that really has switched things off for the moment. And if we go into the weekly, you can see it's probably going to finish this week, creating the weekly buy pivot right in the buy zone of that range. You can see there. So that has really switched things off. That they've changed the rules. They've flicked the switch at a point where the market was really getting ready to possibly collapse. So there would have been plenty of short positions on. So we're seeing that reaction. So really, until something changes, I'd be expecting it to head all the way to the point of control there, around $70. It may meet a wall of selling there and fall back over because of oversupply anyway. And who knows whether they're going to defy sanctions and sell what they want anyway down the track. But for now, I'd have to switch off the $59 threat of things collapsing and say, we're possibly going to see a bit of a squeeze here towards $70, and then we'll see what happens.
Yeah, I guess the bigger question is whether or not this is a kind of a knee-jerk reaction, or if these sanctions actually change and have a long-term uptrend in energy prices. I think when we were talking about this just before, you raised a good point.
Yeah, like you said, if we do see next week, it just goes straight back down and goes back through those lows, it'll be like, whoa, watch out. That would be really dangerous. So I guess we're getting those really good lines in the sand now where we can know what's going on. But for now, I'd say pressure is to the upside towards that $70. But boy, if it goes back down through 60 in the next month, I'd be staying well away.
Yeah, I guess the two major oil majors, that's Rosneft and Lukoil, they account for roughly 70% of oil of Russia's major oil exports. But the big question with these sanctions, as you've raised before, was whether or not this can actually bite, whether or not these actually land. From what I've been reading, I think the big thing that people have been raising is the idea of not just these sanctions, but the threat of secondary sanctions that the US is going to do. So if people like India or China are going to continue trading with the oil, which they have been through every other sanction, they may be subject to secondary sanctions, which might freeze out their assets from the US system. But they may also ignore it. They may just go with the Chinese system, right?
Yeah, well, I guess we'll have to wait and see, won't we?
All right. Well, another big move we've seen has obviously been gold and silver. So a very sharp plunge. I think the largest plunge in 12 years in those two, stopping the parabolic rally. Is the long term trend still intact?
Oh, well, the long-term trend is absolutely still intact. It hasn't even created a weekly sell pivot from what's happened. So there's no, you know, I'll show you the chart. If you look at a long-term chart, it's like a tiny little blip on the rally that we've seen. But when I see that sort of volatility pick up, especially when the market is that overextended, it does prick up for me that there's potential that we will see a bit more follow through. And the thing about gold and silver is that their rallies often end with a spike, wherever most markets will sort of have, when they've got a lot of upside momentum, they can take a year or two to top out, or it takes a long time. Whereas with these markets, they absolutely get overextended massively, and once the music stops, it can reverse and fall away just as quickly. So that's probably how I'd look at it at the moment. Is very short term. Here's gold on a weekly. It looks fine on a weekly, really. It's certainly not at a point where you're saying, oh my God, I've got to run away. You can see here, if I just go, what do we need to see? A weekly sell pivot. So a weekly close below 4,000 from here. It will change the picture somewhat because we've had, it's turned into a weekly uptrend here. It's been in just one-way traffic. The last weekly sell pivot, there's one there, there's one there. So you saw there a long period of going nowhere after that weekly sell pivot. You had a big sell-off through here after that one. I think there's one there. So that was just not much until you got the weekly buy pivot and things took off. So a weekly sell pivot would probably have me saying that you're definitely going to see more of a correction than we've seen so far. But so looking at the daily here, there's 4,400 was the high. That's a massive range, hundreds of dollars, and would have been huge volume. So I definitely do think that we're going to see more downside eventually. I'd say it'll probably try to rally and get hit. And if you do see it heading below 4,000, a weekly close below there, I think we will see a bit more downside. And it can still look, super bullish long term. So it's not like I'm saying, it's all over. But I have taken profits on a bunch of gold stocks because I do think it can sell off further from here. But yeah, it is still early days.
And we've seen, of course, silver fell even harder. It was down 7% in one session, and I think it's now just roughly 10% off its highs. So you think the same thing with silver? Potential for a shorter-term shakeout, but the long-term trend there still there?
Yeah, I mean, this is where I actually got most nervous looking at the chart was silver, quite frankly. If you have a look at a long-term chart of silver, which I'll just bring up here and clean up for you. So here is silver, going all the way back to the 70s. And we had that Hunt brother cornering of the market, crazy move in silver, all the way up to nearly $50. And that then turned. And look how quickly the heat can come out of these markets when the music stops. The reversals can be really brutal. So that went into a massive bear market for many years. We had the 2011 rally, which, and just to note that it went and poked its nose above that old high and then had the false break and failed, and then actually went into a really steep bear market there as well. And that's where we're just seeing now. It is just a bit of a risky time. We've had this big spike. It's poked its nose above the high, and if the failure does happen, we could see a mean reversion event at the very least, and that could take it back to $40, for example. But long term, if it does end up breaking out above that high, I could see it rallying further, just on the idea that the gold silver ratio in 2011 was down at 40, and at the moment it's at 80. So silver could still play a lot of catch up if we are going to see a really massive bull market. So I'm not saying it's all over. It's just that this is a bit of a risky moment where you could see quite a sharp reversal and some sort of mean reversion before deciding which way it wants to go next.
Well, the bigger backstory is really that these global central banks are still buying gold, right? China's resumed its gold buying. Its reserves are now estimated about 2,300 tons. It's probably much higher than that official number, but that's worth roughly 240 billion US dollars. So that's about 6 to 8% of total foreign reserves. And I saw recently, actually, I've got a chart for this. The IMF has reported that global central banks are on track to hold more gold than US dollars for the first time in modern history. So that's a big shift. There's a massive, obviously, long-term buying that we're seeing in the background there.
Yeah, absolutely. Yeah, the central banks, very inelastic with their demand. They'll just buy if they want to adjust things. And also from Goldman's, they were saying, look, if you allocated even a percent of the money that's in sovereign bonds towards gold, that could drive prices towards $5,000. So a shifting when you're looking at long bonds and the risks inherent there, the massive deficits. I'd say the US will probably in the end try to run things a bit hot and inflate away their debts. That's probably the easiest option for them down the track. So do you really want to hold 10, 20-year bonds when inflation has been a problem? And if it rears its head again, all of a sudden your returns, if they're around 4%, 4.5%, doesn't take much to make those returns zero if inflation rears up again. So holding those very long-term bonds could be a bit of a risky proposition going forward. So where do you put the money otherwise? Allocate it to the short end, but also maybe a bit of a reallocation towards gold. And so we may still be in the early stages of that.
Yeah, that's really interesting. I saw another super interesting chart from Apollo this week showing how closely gold has been tracking US business uncertainty. And I guess a lot of that business uncertainty, when you dig into the numbers of that survey, it comes down to supply chain inflation. There's a lot of businesses that are really concerned about inflation coming within their systems. So the CPI report is going to be very interesting to see what happens there, and maybe that will be the thing that kicks off the next run.
Yep, absolutely.
Yeah. All right, well, I guess with the last thing we're going to talk about, which we've been covering a number of points throughout the last few weeks, is the big rare earths and critical mineral deal between Albanese and Trump, right? Signed $13 billion rare earths agreement. Both sides have agreed to help strategic funding of our juniors. I mean, the two priority projects that were brought up again were the Alcoa, the proposed gallium plant in Western Australia. So that's pulling gallium from the bauxite that's used for aluminium, and Arafura. Arafura was mentioned a number of times as a key provider of those magnets that China recently restricted within their recent export restrictions. So big moves within there. We've been talking about this for a long time. Been a big run up. What do you think about it now?
Yes, well, when these, as I've sort of been saying, when you get a paradigm shift, you pretty much throw out all of your past valuations and thoughts, and where the company stock prices are is really no reference to what the new paradigm is. So when you all of a sudden have confirmed money coming your way to fund these things, like Arafura needed $1 billion. I mean, they still need to issue $1 billion worth of stock probably, and maybe less now if they're getting a lot of support from America on this. So that may be changing the calculus somewhat. But there was a lot of uncertainty about whether or not, the project itself would go ahead, because you've got such volatile pricing. Who wants to lend you $1 billion if the pricing going forward is so volatile and really under the control of China, what they want to do? So that's where you saw with Arafura, the project is fabulous, and, it ran to 70 cents in that former, critical mineral rally. But look at that, crashing from 70 cents all the way back down to 12 cents right back down to the buy zone there of that whole wave. And, this is the sort of volatility you were facing in that old paradigm. And now we're saying, well, actually, we're in a new paradigm. And that's where you've seen this stock go from, 20 cents to a high of, and notice the high up around 60 cents right to the top of the sell zone. And so this move from 20 cents to 60 cents in a straight line, that's showing you just how big this shift is in the market's thinking and what's going on, and the probabilities of this company actually getting their project up and running and having a certainty of the pricing that they'll be able to sell things at, which helps with the financing and making sure, and the profits down the track. So you can pay more for that money. So your PE has to expand as well when you're saying, right, this is actually a goer. So, really interesting moves. And so going ahead, you've seen what is really a buy the rumor, sell the fact, where it gapped up and people were paying 60 cents the other day on the announcement and has fallen all the way back to 43. So, really you'd be a buyer on weakness. So I'd love it if it managed to shake a few more people out and, even retest that old high there, which is around 28 cents. Anything around those low 30s, 28, something like that, if we could get a shakeout, I'd still be pretty keen on probably grabbing that one.
Yeah, I mean, I wrote about this yesterday saying that the price you pay to enter these kind of things is really important. And there is probably going to be more downside before we see the final phase of this run, which is likely when the announcements of those floor prices come in for these critical minerals. That will obviously see another rally will likely come from that. But it's a big reminder, I guess, that geopolitics is moving faster than markets at the moment. Big changes in oil, big changes in rare earths. It's pretty interesting times.
Yeah, it sure is. I mean, here's Sunrise Energy, and there I think Scandium, and they've just announced a deal this morning with, who was it that just is taking an offtake of their Scandium, Lockheed Martin, I think. So this stock, from oblivion just a little while ago, down at 20 cents, up to $6 in a straight line. And just recently, it has had a bit of a sell-off on the back again, buying the rumor, selling the fact. But you can see a really strong, sharp move. And I think their deposit is a lot of cobalt as well. And so, that there's some stocks out there that are moving fast, and with the fact that the whole paradigm is changing. The rules of the game are changing, which means the valuations and probabilities of success are changing rapidly too.
Right. So new phase of the US-Australia alliance, I guess. It's linking mining, manufacturing, and defence more tightly than ever, really.
Yep. So, lots of opportunity out there.
Well, it's interesting times. I think we'll leave it there, Murray. Thanks for your insight, and thank you.
And apologies that we can't have
the
face to camera here. I'm up in Brisbane, and my internet connection's been pretty crap. So, so we've had to switch off the video, so you don't get to see our beautiful faces. But it'll be back up and running next week.
Yeah, we'll be back in the studio, and we'll be back with more insights. All right. Thanks for listening, guys.
All right. Cheers, mate. Bye-bye.